markets, we're going to be discussing what's happened last week and also what we're looking for in the week ahead. Now, we just need to briefly discuss the disclaimer before we get down to the charts. Now, all the content in this video is for educational purposes only. There's no guarantee that the trade ideas within this analytical video will result in profit. Clients should also be aware of all the risks involved, and anybody that trades spot foreign exchange options or CFDs should be aware of the risks that technical analysis can result in losses as well as profits. Now, please go to our main page at www.pia/first.co.uk/disclaimer to see our full disclaimer and risk warning. Now, we're going to, as I said, we're going to break down time frames. We're going to look at all the FX majors, what has been happening in the marketplace, and also what we're expecting and looking for in the weeks ahead, and discuss the different chart formations and the setups that we're looking for this week. So first of all, we've got the euro dollar charts in front of us. We're going to break down first from the monthly chart. Now here we can see that we've had quite a mixed and volatile price action. We're in a very large bearish channel formation. Now this last rally up from the 2017 lows has reached a Fibonacci retracement level. So we've got a 38.2% retracement level here at 125.22, and we've seen price action, or this rally, capped by this Fibonacci level. We've also got trendline resistance just above here, coming in around 126.36. So any rallies now, we're really looking to be capped in this major currency pair. If we break down to the weekly chart, here we can see that we've got the potential of an ending wedge pattern, and for quite a prolonged period of time now we've seen some consolidation in this major currency pair. Now last week's sell-off stalled at the trend of higher highs. That comes in around about 122.20, and we're looking for either gains to be limited or a break of this support at 122.20 to result in further losses. We've got some bespoke support, some intraday bespoke support located around about 122.85, and like I said, we've got this low trade from Friday near 122.20. So we're either looking at selling into rallies this week or selling a break of this trendline support. Our first target level is 119.14, and that's just above this Fibonacci extension level, which comes in at 118.97. Now if we break down to an intraday chart, here we can see again we've got a wedge formation. We broke out and we retested, but this last move has been pretty mixed and volatile, close to the 261.8% extension level. And in fact, our call on Friday was actually to buy dips at 122.34, and we saw a move back to the upside. So like I said, we're really looking for rallies to be limited this week. We're looking to get short of this major currency pair for the next move to the downside. Sterling dollar, again we're going to break down firstly to the monthly chart. It's not quite as aggressive outlook to the downside, and there is scope for some further rallies in sterling dollar before we see a move lower. Now we have surpassed the 38.2% pullback level, comes in at 139.27. We've got our bespoke resistance here at 143.84, and we're looking for that to cap any further buying in sterling dollar. The last 2 weeks have produced inside Arami candles, and that's quite a clear sign that there's investor indecision in this major currency pair. Now, if we break down to the weekly chart, here we can see that we've got a potential of a completed Elliott wave formation. So this being the first wave to 100%, retracement down in 2, up in 3, down in 4, close to the 161.8% extension, and then this rally up to 142.11. And you can note that levels above this very important Fibonacci level have continued to find sellers. However, there's no clear indication as yet that this this rally, I should say, is coming to an end. And like I said, our bespoke support is located here at 143.80, and we're looking for that to be the completion of this bullish Elliott wave formation. Breaking down to the daily time frame, and here we can see that we've had a very prolonged period of mixed and volatile trading, and in fact we've had 51 days of mixed results in sterling dollar. Now we've got a 261.8% extension level of this last rally located at 144.59, so there is scope for a break of this trend, this channel formation, but we look for gains to be limited and looking to sell into rallies in cable this week. Dollar Swiss, the monthly chart really doesn't give us too much information. Mixed and volatile trading from the middle of 2011, possibly forming a bearish wedge formation, but we've also got this bullish wedge formation inside, and if we can see a break here of 99, the figure, then the measured move target for a breakout in this currency pair is up to this level here, 103.40. So at the moment, pretty mixed signals on this time frame, but this formation highlights that the bias is still for higher levels. Now, if we break to the weekly chart, here we can see that the last move to the downside from the 100.39 high, which was posted on the week 23rd of October. We then saw this very impulsive move to the downside, but we stalled at this 261.8% level and we moved higher. So this initial move is still deemed as being corrective, and we're probably going to see a corrective move to the downside before we see the next leg up. We've got bespoke support located at 94.25, and we would expect levels around here to attract buyers once more. Daily chart highlights, again, just looking at that last sell-off. Okay, we've got a 261.8% extension level, like we said, and then we've held within this bullish channel formation. Now, we have got some bespoke resistance at 96.66, and then we've got the channel resistance at 97.23, which is near this 61.8% pullback. So there is scope for some buying at the start of the week, but we'd look for it to be capped, and in fact we'd look to sell it into this range, but would also look to buy the dip. So pretty mixed picture in dollar Swiss, selling rallies, buying quite deep dips in this currency pair this week. Now, you might say, shouldn't that be a pure reflection on euro dollar? Normally would say yes, but euro Swiss and sterling Swiss both look like they're actually making topping formations. So there is scope for euro dollar to move to the downside and dollar Swiss still to move to the downside without sort of disjointing that dollar bias. Dollar yen, we'll just break down the time frames first. So monthly chart, possibly a bullish reverse head and shoulders pattern. So this being the left shoulder, this being the head, and this being the right shoulder. The only trouble with this outlook is we need to see a break here, which is 127.25 to confirm. What we do know is this last leg up from the middle of 2016 was pretty impulsive, and this last move to the downside has been pretty mixed and volatile, and that's quite common in corrective formations. So the monthly chart highlights a mild bullish bias, but we really need to break down into other time frames to get a proper view for this pair. Now, if we go to the daily chart, here we can see the last leg lower from 114.74. Again, Elliott wave formation completing close to 104.54, which was the 261.8% extension level. And then we've seen this move to the upside. Now, we wouldn't call a buy around this level because we've got this trendline resistance now coming in. If we just pull this down, 107.54, which is pretty close to Friday's high just before the non-farm payroll release. So a pretty mixed picture in dollar yen, but the overall outlook is for higher levels. Now, we obviously need to see a break of that resistance level to push this pair higher, or we're going to be looking at buying dips. And again, a pretty solid area of support is around about 105.60. Breaking down into shorter time frames, and there's two pretty interesting patterns here. The first pattern is a potential bullish reverse head and shoulders again. So we've got left shoulder, head, and then right shoulder here. And this is the neckline, and you can see that the sell-off on Friday after non-farm payroll did stall at this neckline. So there is scope that this is just a retest, and we're going to push higher. But again, the upside could be pretty limited in this currency pair. And in fact, if we look at this on a different outlook, an AB equals CD formation only takes this pair to 107.95. So really at the moment, dollar yen is sort of in no man's land, if you like, and the preferred trade over this week and going into next week is to buy into more sustained dips for this pair. Dollar CAD. This is probably the most important time frame, the weekly. Here we can see an ending wedge formation. We've got some trendline resistance or trendline of lower lows coming in at 131.73. Now, the reason I've highlighted this Fibonacci extension here is because it's quite important. We're sort of trying to work out why this initial rally was capped, but we've got the 127.2% extension coming in at 131.49. And if we break down to the weekly chart, this is also a 61.8% pullback of this impulsive move to the downside. So again, the picture here in dollar CAD is pretty mixed, but we're looking for losses to be limited and for this wedge formation still to play out. Now, if we break down to the daily chart, let's just put that back in place. We haven't got bespoke support until 126.32, so there is scope for a move down within this channel formation towards this bespoke support, which is between the 50 and the 61.8% pullback level. So 126.32 is quite an important level for dollar CAD this week. And in fact, if we look to this intraday time frame, and the reason why this is highlighted on its own is because we're trying to show an ABCD formation. So this would be A and B, and then putting this down to the top, this would then be C and D. And if we look there, that projection for an ABCD correction is at 126.40. Again, going back to the daily chart, 126.32 is bespoke support. So this is very solid support, and we're looking for that to catch buying interest again this week and for it to take this commodity pair higher. Aussie dollar, monthly chart first. A huge expanding wedge formation, again as an eventual bias to break to the downside. Levels inside the Ishimoku cloud found sellers. This whole move from August 2015 looks corrective. It could be seen as a channel formation. It's definitely very mixed and very volatile, and that offers a downward bias in this currency pair. Now, if we go to the weekly chart, here again we've got another ending wedge formation. It'd be pretty unwise to sell at the open. Trendline support is located at 96.16, and there's a very good chance that we'll probably see some bouncing or a corrective bounce off that support level. If we go to the daily chart, again last week very mixed, very volatile trading. Bespoke's resistance this week is seen at 0.7774, and that is close to this previous swing high. So we're looking for at least a correction to the downside from this pretty solid resistance area here. Euro sterling, again we're going to break down the time frames. Monthly chart doesn't give us a great deal. We've seen impulsive moves to the downside and then a pretty prolonged period of consolidation. The candle in March could be seen as a bearish outside candle, but we prefer to see these at the top of a trend, and we have seen mild follow through selling so far this month. The weekly chart again doesn't really give us too much to play with. We've come out of the Ishimoku cloud. It did get retested, and then we've seen some moves to the downside, but this level here is pretty solid, this 86.85 area, and again we wouldn't really be looking to sell into this pretty strong support. If we go to the daily chart, we can see the last move down was impulsive. These legs back up are pretty mixed and volatile. There is scope for some selling at the start of the week. Like we said, we've got previous support coming down here at 86.86, and we're going to be monitoring that support level. And in fact, an AB equals CD formation from that support takes us all the way up to 88.13, which is our bespoke resistance, and 88.17 is a 50% pullback level of this impulsive move to the downside. So what we're probably going to see this week is a move lower, an initial move lower, but only for buyers to re-emerge and then to move up to this level, and this is our prime area for a medium-term short trade in this cross currency. Euro yen, and this is the last one we're going to be looking at. This is actually the preferred trade, if you like. If there was going to be a trade of the week, I think Euro yen would be the trade of the week this week. And the reason behind that is because we've got quite a few things, different levels that are aligning in this cross currency, and the risk reward potential is also very good. So firstly, the monthly chart. Here we can see that levels outside of the monthly Ishimoku cloud found sellers. We then had this very strong move to the downside. This is a bearish outside month. Such a strong candle, negative candle, is also called an AMR, which is an acute monthly reversal candle, and it holds pretty significant bearish bias for this cross currency. Now the Marubozu level, which is the midpoint from the open and the close of this bearish candle, is located at 132.76. That's a very important level to look at this week. Now if we go to the daily chart, here we can see mixed volatile trading again for quite a prolonged period of time. Let's just see how many days we've posted mixed results. 27 days, so virtually a calendar month, we've seen some pretty mixed and volatile trading in this cross currency, but we have pushed to the upside. We have broken this trend of lower lows. An AB equals CD formation takes us to 132.77, and we've got bespoke support located at 132.70. So there's three reasons really why this rally in euro yen, or this corrective move to the upside I should say, so it's not really a rally, should be capped this week. We've got three reasons. We've got the Marubozu level, we've got our bespoke resistance, and we've also got a corrective AB CD formation target located at the same area. So we're looking for that to be pretty solid, and in fact we would be pretty surprised if we see a sustained move above here, which is 133.20, because that's been quite pivotal for the majority of 2018 and even going back into 2017. So that's our outlook for the major currency pairs this week. Like I said, I hope you find them educational. We'll be producing some written reports that highlight all these different time frames and trade ideas for this week. Please do feel free to post questions on the Orbex blog if you wanted to discuss any of these trade ideas. Okay, good luck, and we hope to speak to you again soon.